This conference will now be recorded.
In the last session, we were talking about accounts payable or vendor related transactions. Is this clear for everyone? At least basic idea about AP or accounts payable purchases?
Yes, sir, it's clear.
Okay, all right. Now let us talk about sales. Let's talk about assuming we are selling to customers. Now, when you're making any sale or when you're selling anything to a customer, what is your main intention? To get loss or to get profit?
Profit.
Our intention is to get
Profit.
profit. Okay, we are selling and we want to make profits from sales. And when you're selling anything to a customer, what usually we will sell to a customer?
Goods. Product.
Goods or services.
We sell
Finished product.
majorly goods and services. Am I correct? Goods means physical product.
Yeah.
Yes.
And then a service which you cannot see. Fixed asset, we don't sell it to the customer, that is treated as a separate. So don't include fixed asset here, only include goods and services. Material, which is ready to be used, in short, finished product, and then any kind of a services. Now, how we calculate profit? When we talk about profit, how do we actually calculate profit? Is there any formula for it? Or I can assume anything as a profit?
Sales minus
Is cost of goods sold. Gross profit.
Alright.
Sales minus
Sales minus
Cost of goods sold.
cost of goods sold is equal to profit. Is this correct?
No, you get gross profit, not a profit.
Yeah. Here we call it as a profit. Now, to be very specific, sales is equal to value of product sold to customer from invoice. Is this correct? When you sell anything, are we supposed to give invoice to the customer or not required? Bill.
Required bill.
Bill is required, because if you don't produce any bill, no customer will buy from you. And whatever the value that you're mentioning on your bill, on your invoice, it is called as a sales value. Then cost is what? COGS. When we say COGS, we are referring to cost of goods sold. Cost of the product sold to the customer. Is this correct?
yes,
Or
sir.
I can say price here. Price of the product, and here I'll write cost of the product. Meaning, if you look at these two terminology, once we are writing a price, once we are writing a cost. Cost and price both are not same, both are different. If profit is included, it is the price. If profit is not included, then it is cost. Is this right?
Yes, sir. Yes.
If cost is given, cost does not include any profit. If price is given, price is inclusive of a profit. And then profit is equal to sales minus COGS. Now, to run any sales cycle, we need 3 modules. How many modules we require to run a sales cycle? You need 3 modules.
SDMM. Yes.
So you need
SDMMFI.
SD, you need MM, you need FI. Only then sales is possible in a company. Straight away without FI, you cannot make any sale. Now, why these 3 things are coming? Because it is integrated sales or direct sale.
Integrated.
Integrated cell.
This is all integrated sale. So we have a topic called FI SD integration. Am I right? We have a topic called FI SD integration. In short, you also call it as which cycle? Sales cycle is what?
Order
To
to
C
sale.
cycle.
O2C.
O2C.
OTC or order to
Cash.
cash cycle. From customer order until customer cash collection, whatever is happening, everything to be part of your SD integration or O2C cycle. Okay. Now, we sell goods and services to customers based on orders. Is this correct?
Yes.
Yes, sir.
You will be selling goods or you will be selling services to the customer only when you receive an order. It is not like you will keep a store and then walk in store, all this kind of thing. Nobody will do it. And every customer will place the order. Based on the customer order, you will decide whether to sell or not to sell.
Yes, sir.
Meaning, before you decide a customer, can you sell it to anybody? If I come, I say that I want this so and so item, I will pay you after 1 month. Do you give me directly?
No.
Without knowing who I am, whether I can pay or I cannot pay?
No.
No.
No, right? Meaning you will not decide anybody as your customer straight away. You have a logic to identify the customer. You not straight away sell it to me, right? If I come to you, please give me so and so item, I will pay after 1 month, I will pay next week. Do you directly give?
No.
Meaning you have a logic, you have a process to identify the actual customer, and then you will have the agreement with the customer, contract with the customer. Okay, we will get into the business deal, we will deliver the product, we will make the sales to you, make sure you will release the payment within 30 days from the delivery or within 45 days, within 10 days. Reason, whenever you make any sale, you have 2 types of sale. One is cash sales, another one is credit sales. Most of the sales are cash sales or credit sales. Both are possible, but majority is where?
Credit sales.
Credit sales.
These are less, these are more. Credit sales are more in any organization, cash sales are less. You can also call it as counter sales. Anybody heard counter sale?
Yes.
Okay, cash sales are counter sale, meaning you'll have to settle immediately. Wherein you have this POS machine, POS machine, swiping machines. These kind of things are majority your cash sale, but in general, majority of your sales will take place through credit route or credit sale. Credit sale means immediate payment or later payment.
Later payment.
Later.
Credit sale means you will get payment later.
Later.
All right. Now, you also have direct sales and order based sales. What sales are more? What sales are less?
Order-based sales are more.
Sales are
Direct sales are
Order
less.
based.
investors.
More.
Direct sales are less or direct sales are more?
Direct sales less.
Less.
Order based sales.
Direct sales are less, sir.
Direct sales are less, order-based sales are more. Because any customer who wants to buy any product, any service will have to place an order. Will have to place an order. Based on the order, you will be tracking the sales and you will be delivering the product and you will complete the sales. Now to do this, what we need to ensure? You need to identify the actual customer.
Yes.
We need to identify actual customer. Let's say customer is identified, order is received. Customer is identified, order is received. And before this, before you identify the customer, you have a process, right? In every company, you have sales executives, sales representative who will identify the customer.
Yes.
Customer will not come on their own. Am I correct? In every company, you have sales representatives, sales team, salesperson, salesman who will identify the potential customers. And they'll take the product, your company, to the customer in the market. They say that they'll promote or whatsoever. Then customer will say, okay, let's get in touch with them. That is how you will identify a customer. Once customer is identified, in order to create a customer, you need certain documentation. Even for you to become a customer in anywhere, for example, you wanted to open a bank account, you wanted to open any account anywhere. For them, are we customer or not? Wherever you go, sign up. Yes, no?
Yes.
Wherever you go, sign up, you are a customer. And in case, what I will do, whatever I do, I need some information to be given for the verification. Whatever I give, will they verify or not? If I give an email ID, they will send a link, ask me to confirm my email ID to ensure I am giving the right information, which is basically your KYC, know your customer. If I give a mobile number, will my mobile number be verified or not? Either you will send a note to, you will give a note, you will get an OTP or some kind of thing. If I give an address, somebody will come and verify the address. Reason what I am doing, I am going to sell a product to you on a credit basis, for which payment I am telling I will collect later. Dilip, can you please go on mute? Okay, I am selling you a product for which I am going to collect the payment later. For any reason, if I am not able to connect the payment, or for any reason, if you abscond, if you disappear, will I be at loss or I will not be at loss? I have sold a product to you, right? We agreed that, okay, after a month, I will collect the payment. You absconded after a month. You changed your address or whatsoever. You are not responding. Later, I found that this is a fake address, fake company, all this kind of a thing. I will be at a loss. Do I want to face this situation or not?
No, sir.
No.
Right? Nobody wants to face this situation, meaning nobody will just like that create a customer. Nobody will just like that create a customer. Everybody will have supporting documentation, verification process. In fact, to a customer, if a customer is telling, please give me a, please sell so and so product worth huge amount. Let's say somebody is asking, please give me 2 million worth stock. Will you sell directly 2 million worth?
No, sir.
Huge amount of stock. Do you sell directly or you will not?
No, sir.
You will not sell, because for every customer, until you know, until you start a business transaction with them, until you come to a conclusion, yes, this customer is making a payment on time, this customer is genuine, all the orders whatever he is placing, he is not returning just like that. Many things they will see, accordingly they will give or they will decide, okay, you can order whatever you want now. For any value of the amount, we will be able to deliver. But for a company to do it, does company require Confidence or not? Trust or not? Some transactions to be initiated or not? Yes, no? Just like
Yes.
that, no company will do anything. For whatever the amount, nobody will sell it. Because it is a credit. It is a credit.
But sir,
Now,
I have question, sir. Are you say like customer identification is involve only the salesperson, but how about the accountant?
how about?
Account department, the account and payable department. Okay, they check the credit too, right?
Yeah,
Before.
that's what we are coming there. Yes.
Oh, okay.
Okay. And once you identify that this is the customer and all, what we will do is you'll have to identify the customer credit check. When we say customer credit check, it is as simple as like you are giving a credit card to somebody, you are giving a loan to somebody. You know that somebody is in need of money, you are giving a credit card, you are giving a loan. But you should also check whether they can repay or not. Yes, no?
Yes.
Yes, yes.
You will also check whether they repay or not. If I say give me 5 lakh loan, I will pay you 10,000 rupees every month as EMI. How will you pay? I say that you are giving me 5 lakh, I have this 5 lakh, from this 5 lakh I will pay. No surprise, within 1 month I will spend all the 5 lakh. I will, you will measure my credibility or not, creditability or not, whether I'm in a position to pay or not. What is my source of income? What am I doing? My history, credit history,
Yes.
credit profile.
Mm-hmm.
The way you have credit history, the way you have credit profile, companies will also have it. That will be checked. Accordingly, they will set a credit limit. What they will set?
Credit
Credit
limit.
limit.
They will set a credit limit for the customer. For example, I set a credit limit of somewhere around, let's say, 70,000. Assuming for a customer you set a credit limit of 70,000, credit limit is only applicable for credit sale, not for cash sale. Am I correct? Name itself is telling a credit limit.
Yes.
Yes, sir.
It is applicable only for credit sale. Let's say I am selling credit sales 1 for 40,000. Credit sale 1 for 40,000. After this, what is my available limit?
30,000.
30,000.
1,000.
30,000.
30,000.
Let's say I make another credit sale 2 for 10,000. Next, available credit limit
20.
20.
20,000. Now, if I place another order, this time I want it for 30,000 or 25,000. Is this now first one? My credit limit is 70. Here my credit limit is 70. My sales are accepted or rejected?
Accepted.
Accepted.
Sales are accepted because my limit is sufficient to make this a sale. Then my credit limit has become 30,000. I got another sale for 10,000. Accepted or rejected?
Accept.
Accepted.
Sir.
I will accept it. Then my credit limit had become 20,000. I got a sale for 25. Accept or reject?
Reject.
This is rejected because available credit limit is not sufficient to make this a sale.
Yes.
There are only two possibilities. Possibility number 1, make the payment so that credit limit increases. Same like your credit card concept. If you
Yes.
pay the outstanding bill, your credit limit will go up again. Not that bank will increase because you're spending more. Am I correct? Any bank will increase your credit limit if you're spending left and right. Sometimes they will block the credit card. When you swipe, you will get a message, transaction declined, because you are using the card, you are not making any payment, bank is blocking your card or not for the further transactions. When you make the payment of credit card, your card is automatically unblocked, activated. Anybody noticed these points? Yes, no?
Yes, yes.
How your credit card limit is increasing, decreasing, why your credit card is getting locked or blocked because of non-payment, because of
Activity.
payment not made on time and all. Similarly, here also companies will do it. In every company, there is a credit and collection department who is responsible for monitoring the customer credit and responsible for customer collection. They will look at the outstanding report of the customer. They will send the collection agent. They will send the collection persons. In every company, you have the collection team who is responsible to collect money from customer either through call, either through email, or to go and visit the customer location physically. Yes, no?
Yes.
Sometimes customer will tell, okay, I will pay. Sometimes customer will not pay even after due date. You need to remind the customer, so and so
Yes,
invoice
sir.
is already due date exceeded, please release the payment. Sometimes you have to call, sometimes you have to send an email, sometimes no response for call, no response for email. Sometimes you have to send your collection agent to the customer office or customer location to collect the money. Still you don't get any response, you don't collect the money. Then you will file a case, credit case, legal case. Yes, no?
Yes, sir.
Yes, yes.
Right? All these things will happen in the real environment, in a real company also. But if we at least come to know, okay, these are all the points which will happen from a sales perspective, easy for us to connect the dots as you move forward. Now, only two possibilities here. Option number one, make the payment. Option number two, reduce the order value.
Yes.
Yes, sir.
Option number one, I have to make payment. For example, this is rejected now. Let's say payment made of 10,000. I made 10,000 payment. This 10,000 payment, if I make, what is my available credit?
10,000, sir.
30.
Previous
30,000.
credit is 20. Now
5,000.
I made a payment of 10. This will be
10,
30,000.
30.
Is this correct or not? This is rejected. Red you put because it is rejected. It is rejected means previous credit is applicable 20. On 20, if you make additional 10,000 payment, 20 plus 10, your revised credit limit is 30. Now, if I bring this credit sale again, is this accepted or not now? 25,000.
Accepted.
It will be accepted.
Now you will accept this credit sale. In short, you need to understand how this is happening. Is this important or not important for any company?
Important.
This is important. Otherwise, unnecessarily companies will make a sale and they will not be in a position to collect the money. You would have heard many times doubtful debts, provision for bad debts. Yes, no?
Yes, yes.
Doubtful debts, provision for bad debts, and all you would have heard. These are all the sales where your customer is unable to pay, you are not able to collect. You also would have heard something called dunning. Anybody heard this?
Yes.
Yes, sir.
Yes, sir.
So when you're talking about dunning, we're talking about reminder to make payment.
Yes.
Dunning is nothing but payment reminder, nothing else. When your customer will have to make the payment on due date or after due date?
On due
On
date.
due
On
date.
due date. After
On
due
due
date.
date, you'll have to, not after. After due date means it is becoming a late payment, right?
Penalty also.
Right? You'll have to make sure all your payments are collected from the customer within the due date. If any customer is failing to make the payment within the due date, you have to remind the customer. You cannot sit and call one by one customer, right? Yes or no? If that is the case, you'll have to run a BPO center also, call center also. Nobody will do it. Then what they will do? They will send the reminder to the customer over an email.
Yes.
Right? Now these reminders are nothing but dunning letters or dunning notices. You will also have credit limits are nothing but customer credit management. You will also have doubtful debts. Doubtful debt means amount that may be collected or amount that may not be collected.
May not be complete.
Doubtful debt means your customer amount may not be collected. You are doubtful that whether I will collect or I will not collect. If you are not able to collect any amount, is this a profit or is this a loss to the company?
Loss.
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 Loss to the company. Okay. When you're talking about aging reports, what are these aging reports? Why do you require this aging report?
To identify the due dates when to receive the payment.
Yeah, to identify the due dates, to identify in what time interval you will be collecting the money. Let's say to a customer, I have given 30 days credit period. When I say to a customer, we have given 30 days credit period, ideally we are talking about customer to make payment or we have to collect a payment within 30 days from invoice.
Yes.
Yes, sir.
Any invoice that you create today, if I am selling any product today on 14th of May, ideally I am supposed to collect the payment within 1 month. Let's say 14th of June I should collect my money or customer should make payment within 14th of June.
Yes, sir.
30 days from billing or 30 days from invoice. If I am looking at the age, I will be looking at something like this. Let's say 0 to 30 days, 30 to 60 days. Anybody saw like this aging?
Yes,
60
sir.
to
Yes.
90 days and so on. Whatever is coming in this, let's say somewhere around 60,000. If you see somewhere around 30,000, if you see somewhere around 20,000. Whatever you find in 0 to 30, okay or not okay?
Okay, sir.
Okay.
This is okay because this is not yet due. What about this? Not okay.
Not okay.
Not okay.
What about that? This is also not okay.
Not okay.
Meaning, if you see that the aging is increasing more and more, this is not a good sign. Am I correct?
Yes, sir.
Aging
Yes,
should
Yes,
sir.
not
sir.
be increasing. Ideally, you were supposed to collect payment within 30 days. You failed to collect. It went on to 30 to 60 days. Anything you see in 30 to 60 is due date exceeded, customer not paid yet.
Yes, sir.
Anything within 60 to 90, due date exceeded, customer not yet paid, then you will see what invoices are this. You will see what are these invoices, what did we sell, what is the invoice date, whether we sent any reminder, who made this a sale, who is the responsible salesperson, all the information you need or not. For every sale, do we have a relevant sales executive, sales representative or not? Salesman.
Yes, sir.
Yes, we have.
Yes,
For
sir.
every sale, you have a corresponding relevant salesperson, salesman, and he or she is responsible for collecting the money from customer?
Yeah.
Yes, sir.
Because it is their responsibility to remind the customer. It is their responsibility to send the agent to the customer location, collect the money from customer. For that only, right, they are getting commissions, incentives and all. Salespeople, more than their salary, their incentives and all are more.
Yeah.
Right? It's not only about selling a product to the customer, it is also about collecting money from the customer. Some companies, what they do, if money is not paid, they concerned sales person to take the ownership.
Yes, sir.
Some companies, what they do, if I am recommending a sale, or if I initiate a sale from my side to a so and so customer, now the customer is defaulted, customer is not making any payment and all, company might deduct that sales value from my salary, possible or not, or company might ask me to make the payment.
Yes, sir.
Reason, without verification I brought the customer, on what basis I did a sale?
So your
Maybe I
voice
took
is
a commission from the customer.
breaking.
Is it okay now?
Yeah.
Okay, maybe the salesperson would have taken any commission or any other source of money. He would have done some other sales beyond the customer credit. He would have made some sales. Anything is possible, right? Which may be figured out at a later point of time, not on at the time of a transaction. Am I correct? Now all these things will be validated, all these things will be verified by any company in the organization. Before they make sale, all these points will be understood. Only then they will identify the customer. Assuming all these points they took into the consideration, and they also need to ensure something called DSO reports. When you say DSO report, what is this DSO meaning?
Day sales.
Days sales outstanding. This will give you within how many days you are ideally collecting the payment. If my DSO report is showing 42 days, is this good or not good?
Not
Assuming a
good.
customer credit period is 30 days, if my DSO report is giving 42 days,
Not good.
Good.
not good. This is giving an information that on an average you are collecting money from your customer within 42 days, or it is taking 42 days for you to collect money from the customer. Wherever your DSO is more than the credit period, you will sit and then investigate why we are receiving late payment for the customer from the customer. All this is valid information, valid report to the custom to the business, or not required.
Repair.
Required.
All this is required, right? Only when I know, then I can alert the salesperson, I can reduce the customer credit limit, I can give an alert to the customer, your payments are delayed, please make sure your payments are on time, otherwise we will block your order. Am I correct? If customer wants any order on urgently, you will block the order stating your payments are not on time, please clear the pending amount, then we will release this order. Possible?
Yeah.
All these things will practically happen in any organization, in any company. You will experience it once you join a project. All these things will practically happen from the customer point of view. Because vendor point of view, it is okay, but customer point of view, it is more sensitive. If you make late payment, it is okay to a vendor. But if you collect late payment from customer, is it okay?
No,
No,
sir.
sir.
No, right? All right. Now, next we'll have to look at this sales cycle through order. Which order? Sales order.
Yes.
Sales cycle through sales order. When you're talking about sales order, Now, if you're talking about purchase order and you're talking about a sales order, both are the same. Sales order, purchase order, both are the same. It is only that the person is getting changed. If you and me are getting into a transaction, you and me are getting into a transaction, it is the same transaction for you, for me.
Yes, sir.
Same transaction, from my point of view, it may be a sale. From your point of view, it may be a purchase, or other way around. But the product which is involved in the transaction, amount which is involved in the transaction will remain same, or it will change.
Will be same.
It will remain same. The only point is, one side it is a payable, one side it is a receivable, or one side it is customer, one side it is a vendor, or one side it is a sale, one side it is purchases. To understand these things without getting a confusion, you need to always ensure same transaction you take, write the same transaction once from the vendor perspective, same transaction write one more time from the customer perspective. If you are changing, for vendor I will write some transaction, for customer I will write some other transaction. Please invite the confusions in future. Do you want to invite confusions in future, or you want to avoid confusions?
Avoid, sir.
Avoid.
Right? If you wanted to invite confusions, take separate example, exclusive example for AP, exclusive example for AR, customer vendor. Take a completely different to avoid confusions. Sorry, to invite confusion. If you want no confusions to come into the picture later on as you move forward, you wanted to have clarity, clear understanding, take same example, write the same example from AP side, take the same example, write it from the AR side. Then you will understand for the same transaction, customer point of view, how it is accounted, vendor point of view, how it is accounted. Okay. Now, if you write the flow, first point will be what? Sales order.
Yes.
You
Yes,
will
sir.
create a sales order first. Based on the sales order,
Delivery?
Invoice.
Invoice.
Right. Delivery.
delivery. One sec. Someone will have to go on mute. Praveen Kumar. Yeah. Based on the sales order, you will make a delivery. And based on the delivery, what you will do?
Invoice.
Voice.
Goods.
PGI.
EGI.
Post goods.
Post goods issue. And according to this, billing.
Billing.
After billing,
Invoice.
billing itself is invoice. Okay.
Okay.
After that, you will collect payment from the customer. Then you will perform bank reconciliation. Is this right? Now,
Yes, sir.
sales order, can we call it as SO? All right. Delivery, can I call it as DN? DN means what?
Delivery note.
Delivery note. Post goods issue, what I can write? PGI?
PJ.
PGI. Billing, can I write invoice? Billing is nothing but invoice. Customer payment is nothing but receipt. This is what? BRS.
BRS.
Okay. In this process, in this flow, Do you get any accounting impact in the sales order?
No.
No accounting impact. Wherever there is no debit credit accounting entry, there you will write no accounting impact. Sales order is a just legal document, agreement between buyer and seller, same like purchase order.
Yes.
Same like purchase order. Now delivery note. Do you get any accounting entry at a delivery note?
Yes. No.
No, sir.
You will not get any accounting entry at a delivery note, because if I made a sale, if I have made a sale, what I need to do, I need to make sure, or if you take any example, you take any example where you have a showroom or where you are purchasing a mobile phone or kind of thing. When you place the order, based on the order only, somebody will go inside the some kind of storage room. He will bring out the material, mobile phone.
Yes.
Anybody noticed? All the stock they will put in some room. They will lock that room. Based on the order, they will go inside. Only authorized person will go. He will bring that material and then come out. Anybody saw, noticed any time?
Yes.
Yes.
Not the regular product where you can see everything is on display, whatever I pick and then I give it to you. Not that kind of scenario. Look at a scenario where your stock is kept in a room, storage room. It is locked. Only authorized person is allowed. When you get a customer order, you will create a delivery note. You will give this delivery note to the person. This person will take this delivery note, go inside the room, and he will pick the exact product and then he will come. He will pick exact product and then he will come. He will sign it, yes, material is given. The receiver also will sign, yes, material is received. This is your delivery note. Now this delivery note, you will give it to the storekeeper, the person who is in charge for the stock. Based on your delivery note, he will take out the stock. He will issue the goods. He will issue the material. Am I right?
Yes.
Based on that only, he will issue the material. Now, when you are issuing the material, is there any accounting impact or no accounting impact?
Yes. Accounting impact.
Yes, sir.
What
Sorry to
accounting
interrupt
entry
you,
will
sir.
come?
Sir, some companies has providing a performance invoice. So, performance invoice and sales order are same.
No. Pro forma invoice you will give when you receive any kind of advance, or it is kind of an
Okay, sir.
estimated invoice or quotation invoice. It is not the actual invoice. Before delivering the product, if you give the bill, that is your pro forma invoice. Strictly, you have to write pro forma invoice, meaning it is not the actual invoice.
Okay, sir.
Okay. Now, when you do the PGI or post goods issue, what accounting entry will come? Here, what is exactly happening? The name itself is telling you are posting goods issue. Goods are maintained where? Goods is nothing but material. Material is maintained by FI consultant, SD consultant, or MM consultant.
Material management.
MM consult.
All materials are maintained by MM consultant, material management. Any material coming in, any material going out. In short, material movements, whether it is inward movement, outward movement. You are receiving the material, you are giving or issuing the material. Everything is part of MM. Now, in this case, this particular step, post goods issue, is it coming from FI side, or is it coming from MM side, or is it coming from SD side?
MM
MM
side.
side.
MM side.
It is coming from MM side. Is this having any accounting impact?
Yes.
Yes.
Impact.
Yes, sir.
Yes.
Yes. Now, can we say this is coming from MM to FI? Can I say this FI MM integration?
Yes, sir.
Yes.
Yes.
Because I have to take out my material. Material is all maintained by MM, and MM will have to issue the material. Stock in or stock out? PGA means
Stock
Stock
out.
out.
Stock out. Stock out means stock is going out. Debit what comes in, credit what goes out. Stock is coming in, stock is going out. What's happening?
Stock is going out.
So inventory
Stock is
account
going
is
out.
credited.
Right? Now this stock is going out for profit calculation. If you take out this material, do I need to calculate profit or not? Because this
Yes,
is my
sir.
sale. For my sale, if I wanted to calculate my profit, is it possible to calculate the profit without cost?
No.
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 No, sir.
No. Let's say we are selling a mobile for 50,000 rupees. And now you are going to prepare a P&L. Agree?
Yeah.
You will prepare a P&L for it. In P&L, you will get to debit, expenses, credit, incomes. Am I right?
Yeah.
This is what you get on your P&L. First point, when I make a sale, I will put this 50,000 here as my sale.
Yes.
Okay. Now 50,000 is here. This is straightforward because to the customer, I know I will tell the selling price to the customer even before he purchases. Yes, no? Or I will simply put MRP on every product, barcode on every product. If I scan, I get the price. Am I correct? Selling
Yeah.
price.
Yes.
Let's say 50,000 is my price. If I wanted to calculate my profit, do I need my cost or not?
You need.
This
Yes,
is my
sir.
sale. This is my sale and this is my cost. What cost I need? I need cost of goods sold. I sold one mobile phone for 50,000. What is this 50,000 mobile phone cost to me? This may be costing me only 42,000. Possible?
Yes.
My cost of this mobile phone is only 42,000 and I sold this mobile phone for 50,000. Am I making a profit or am I getting a loss?
Profit.
Profit.
If I am making profit, what is my profit?
Yeah, 8,000.
8K.
8,000.
8,000 is my profit. Okay, now if I look at this, this is 50, this is 50. Okay, in my P&L, sales value is directly coming from my invoice, but cost will not come directly. Cost is coming based on the PGI. Cost is coming based on PGI. Now this is COGS is P&L account or this is COGS is balance sheet account.
PNL.
P&L account.
P&L account. Now you will also have balance sheet, right?
Yes.
In the balance sheet, you will have 2 points, liability plus asset. Stock, until you sell it to the customer, you will keep it with you.
Yes.
Yes.
Okay, until you sell it to the customer, you will keep it with you. In our example, what is the cost that we assumed per mobile?
42.
42,000.
42.
Let's assume current stock is, let's say, 4 units. Possible?
Yes.
Current stock is 4 mobiles. Now in the asset, if I write my stock, here, I will be writing in simple 4 mobiles multiplied by my cost 42,000. Yes, no?
Yes.
This is what is currently sitting in my balance sheet. Agree?
Yes.
Yes.
The moment I get the order and then I deliver it to the customer, based on what? I need to stock out. if I'm taking stock out, if I'm taking out the material, I need to update 2 records. My stock report should show 3 mobiles after this sale, or 4 mobiles, or 5.
3 mobiles.
3. A.
It should show 3 because you are doing stock out, 1 is going out. Now it should be reduced by 32,000, 42,000.
Yes.
This is, let's say, this is delivery to the customer or issue to customer. This is my balance sheet value of the stock.
Yes.
Okay, this 42,000 is here. This is here. Are these to debit and credit? 42,000 taken out from your stock. 42,000 charged to P&L expense.
Yes.
Right. When you write this accounting entry for PGI, you will write what? COGS debit, stock credit.
Yes.
Is this right? You will debit COGS. This is what you did here. You credited stock. Asset, you deducted the stock.
Yes.
Whatever we wrote on the Excel sheet, is it the same thing in on your accounting entry or anything new?
Same.
This is the same thing. Okay, tomorrow people might ask, why this accounting entry is coming? Can you explain me the financial impact or accounting impact? No surprise, you may have to talk to them these basic fundamental points. Why are you debiting stock? Why are you taking a COGS into P&L? Is this P&L account? Is this balance sheet account? They will put these kind of a basic equation also just to check whether you really know the concept or you are just talking in the interview. Okay, this accounting entry will come for stock out. For billing, what entry will come? For billing, as usual, regular sales accounting entry only will come here also. Regular accounting entry for any sale is customer debit, sales credit.
Sales credit.
This is coming from side or this is coming from SD side to accounting?
SD side.
This is coming from SD. Can I put SD to FI? Yes, no?
Yes. Yes.
I can write this is coming from my SD to accounting. Now, when you collect the money from customer or when your customer is making a payment to you, what entry you will write? Debit, what comes in when customer is making
Cash.
a payment, you are receiving the money.
Cash to customer.
Bank incoming account debit.
You'll have to take bank incoming. Majoritarily, cash, you have the limitations, right? Beyond 20,000, beyond certain limit, you cannot do cash transaction. Agree?
Yeah.
Yes. Yes.
Strictly, you have to do bank transaction. So don't put cash. You will also receive cash, but only with the limited amount, not the huge amount. Agree? Yes, no?
Yes.
Beyond a
Yes.
limit, you have to make the bank transaction only. If you're talking about a company where SAP is used, sales are automatically high value.
Yes.
Okay. Bank incoming account debit. And then customer credit. Yes, no?
Yes, sir.
Yes, sir.
Yes.
And when you do this customer payment, you will also look at the bank statement. You will verify whether the payment is part of your statement or not. If the payment is part of your bank statement, then you will do the BRS, bank reconciliation. What is BRS accounting entry?
Sir, can you please
Main,
explain that customer payment?
Here you are receiving money from the customer, right?
Yes.
When you are receiving money from the customer, debit what comes in, money is coming inside your business, you are debiting a customer, you are debiting bank incoming account. You are crediting a customer because debit the receiver, credit what? Giver. Who is giving the money?
Customer.
Customer. You will put this here. And here if you look at customer is on what? Which side?
Credit side.
credit side, and here customer is on which side?
Debit side.
After making the payment, is customer supposed to give anything additionally, or it is cleared?
Clear.
It's clear.
Cleared. So debit credit will make it zero or not?
Yeah.
Right? That is why when you make a customer payment, you will put customer on the credit side, because there is a outstanding receivable from the customer on the debit side. When you receive the amount, you put customer outstanding on the credit side. Debit amount, credit amount will become zero. Customer outstanding will make it zero now. Nothing is pending from customer. Plus minus you'll have to put. That's what it is happening. These are basically clearing entries. What entries?
Clearing entries.
These are clearing entries which will allow you to track what is received, when it is received, against what it is received. For example, you take a simple example of rent only. Let's say you are staying in an apartment, in a flat. In this, you have to pay rent every month or not?
Yes.
I have to pay rent every month. Now, what I will do, in your name, I will write the rental agreement for 12 months. Every month, let's say 10,000 rent. In my books, I will write from you, I have to receive 10,000 every month, January, February until December.
Yeah.
Yes.
So I will show, okay, from you this year I have to receive 1,20,000 rent. 1,20,000 I have to receive the rent. I will write January 10,000, February 10,000 until December 10,000. You have given payment in January. I will make January rent zero. It is already paid.
Yeah.
In February you paid. I will make February rent zero.
Yes.
March also you paid. Let's say April you skipped.
April is due.
If I say April you skipped, okay. Now in my books, April is still pending because you did not pay. Now you paid 10,000 in May. When you pay 10,000 in May, now I am confused. This 10,000 is for April, this 10,000 is for May. You forgot that you did not pay for April. You forgot that you did not pay for April. You are assuming you already made April payment also. If you tell no, I already paid, you will go back and then see you need the history or not.
Yeah.
Yes,
You
sir.
will open my account, you will tell, okay, January rent you paid on 10th January, February rent you paid on 10th February, March rent you paid on, I did not receive any payment on March, April you paid. Then easy for me to make you understand or not. Otherwise there is a point of confusion. If you tell I paid, I will ask you, please show me the proof. What proof? Bank statement. How did you pay? I say I gave you a check. Give me the check number. I will tell you I have transferred. Give me the transfer reference number. Yes or no? If I say I gave you the cash, give me the cash receipt. Everywhere there should be a proof or not? Proof of transaction. If I say I gave you a check, tell me the check number. Give me your bank statement wherein this check is deposited. If your bank statement, if you look at it, if you issued a check, your bank statement will clearly tell check issued or not with the check number. Yes or
Yes,
no?
sir.
Yes.
If you did any online transfer, your statement will tell clearly to whom you transferred, what is the transaction reference number.
Yeah.
If you paid by cash, do you just like that give a cash without any receipt?
No, sir.
No, right? Whosoever you are paying cash, you are supposed to take a receipt. Now give me that cash receipt or tell me the person to whom you paid. Then he or she will tell, okay, I paid to Ajay. Then somebody will come to me asking, did you receive cash from so and so person on March, 10,000 rupees? If I say no, I did not receive it, then do I need all the tracking or not required?
We need.
Required, sir.
All this tracking is required, without which it is difficult. Tomorrow when somebody is asking, give me the statement. You should have the statement in a clear manner, which you can understand, which you can explain it to the somebody.
Yeah.
Because to the customer, it's a business, right? When it is a business, you're continuously making sales to the customer. It is not one time he will come. I don't know whether he will come in this life or not. Is that the case? Or you get the repeated business?
Repeated business.
You get the repeated business. I will buy today, day after tomorrow, again I will come. After 1 month, again I will come. Within 3 days, again I will come. Every week I'm coming. Now there should be a track rate. Now we are not making a cash payment. We are all making credit payments. Yes, no?
Yeah.
What am I
Yes, sir.
purchasing? How much I am paying? I may be purchasing 3 times, but I make you payment one time only. All these three together. I may be buying 10,000 today, 2,000 tomorrow, 3,000 day after tomorrow. 10 plus 2 plus 3, 15. Instead of giving you 10,000 separate, 2,000 separate, 3,000 separate, I will simply issue 15,000 in one go. Am I correct?
Yeah.
Then I
Yes,
will
sir.
tell you this 15,000 is for 10,000 purchase, 2,000 purchase, 3,000 purchase. I will give you advice. What advice I am giving you? Payment advice.
Yes, sir.
Right? I am giving you payment advice. This payment I have made on these invoices. Accordingly, you will knock off. That's where you will write the customer receipt entry in which bank account is debited, customer account is credited. This is clearing the customer outstanding, and then it is keeping the amount in the bank incoming account. Why bank incoming account? Reason, now I am telling you I made you the payment. Now I will acknowledge you, but I will account it only when I see my bank statement.
Yes.
Right? When I see
Yes.
the bank statement, I will ensure that yes, payment is credited to my account. What I will do? Bank main account debit, bank
Bank
incoming
incoming.
account credit.
Yes.
Now what is this doing? This is again knocking off these two. You are clearing bank incoming here and here, debit credit. Yes, no?
Yes, sir.
Your customer account is becoming zero. Your bank incoming is also becoming zero. Correct?
Mm.
And you need to slowly understand why all these things are happening. What is the impact? What is the reason? Slowly we need to make sure we are in a position to understand these points. Now in this, your integration is only here. Am I correct? And that too, this is FIST integration. This is FIM MM integration. Are these two clear?
Yes.
You will be questioned in your interview how these are coming, from where the entry is coming, from where you will maintain the accounts. And if you are telling it is ST integration, ST flow, everything is part of ST, then you're wrong. It is flow of ST, but somewhere MM is coming into the picture.
Yeah.
Somewhere MM is also involving. Somewhere MM is also coming into picture, which we need to understand. Accordingly, you need to tell. Otherwise, you'll not be able to understand it tomorrow. You have to see how is it affecting your balance sheet, how is it affecting your P&L also. Why COGS is on the debit side? You might be questioned the same way in your interview. How it will affect my balance sheet if I make a sale? What impact it will give? If not your interviewer, your client might ask, your user might ask. Possible? If your user is asking these questions, as a FICO consultant, can we say I do not know?
We should not.
Now sometimes your client will take pen paper, he will write on the paper. Okay, this impact, this stock is going out, this is coming in, and he will simply put a T shape, debit, credit, and all he will put. And nobody will write in detail, in clear. And sometimes you have to understand whatever they are telling. No other go. You have to understand. At least act like you are understanding. Don't be blank. Don't be surprised. Don't give different kind of expressions that I'm not understanding anything. At least act. Later on, you can easily find out what it is, because these are all standard processes in SAP. Nothing innovating, nothing is an innovation. You're not inventing anything new. I'm not inventing anything new. Standard across the globe, everybody follows. Am I correct?
Yes, sir.
Nothing new you are doing, nothing new I am doing. Then nothing new, client is talking, user is talking, everybody will talk the same way. Maybe some variation, maybe some confusion. But if you have that clarity, if you at least know this is how it works, easily you can connect wherever you are. Right? This is basically your sales cycle. We discussed purchases from the logistics point of view, from point of view, wherein we understood it is your FI integration. Now we are talking about sale, wherein we are talking about again logistics point of view, ST point of view, FI integration. How sales are happening, how purchases are happening. Is this clear now? At least a basic idea you got?
Yeah.
Yes, sir.
Right?
I think
This
first,
basic understanding is required before you move forward, because when you take any business, when you talk about any company, it's all about buying and selling is your business. Am I correct? Buying and selling is your business. And here one more point which you need to remember. What is this point which I highlighted now? This one,
billing.
billing. When you're selling to a customer, we can sell below two items to customer. One is goods, second is what?
Service.
Agree with me?
Yeah.
Yes, sir.
Goods means physically delivered. Can I physically deliver this?
No.
This cannot be physically delivered, meaning I cannot touch my service. Can I touch? Can I see my service?
No.
No.
Okay.
No. Now, anything that you are delivering, it is your what is this called as?
Delivery related billing.
It is invoice only, but delivery related invoice. Here, since I cannot see this, I will put order related billing. Once I place the order, based on the order, I will create the invoice, or based on the delivery, I will create the invoice. For example, I asked for okay 2 quantity sales, or if I say 5 quantity sales, 3 delivered. Possible or not? Partial delivery.
Yes, sir.
Partially
Yes, sir.
delivering items is possible or not? I will tell currently only 3 in stock. You take 3. Remaining 2 I will give tomorrow. Possible or not?
Possible, sir.
Yes.
Okay. If you don't receive the product, do you accept the invoice?
No.
No, right? If you receive only 3, you will pay only for 3. Tomorrow he said he will give 2. Then tomorrow you said I will pay tomorrow. Then surely he will deliver only 3. Then you have to put 3 into maybe 1000 rupees, 3000. Am I correct? Assuming 1000 rupees is the price. Yes or no?
Yeah.
Yes, sir.
Now here I will tell 2 into 1000, 2000 pending to be delivered, to be billed.
Yes, sir.
Now here I say some kind of, let's say, laptop repair. Laptop repair. Now, can I say here partially repaired, half not repaired?
No, sir.
No.
That's where when you see any service, they will say if I touch, it will cost me 500 rupees. Yes or no? Because it is a service.
Yes, sir.
If it is a product, I will show you. You will see left and right 360 degrees. You will rotate and then see. You will tell, no, I don't like it. No, I don't want it. You want this, you want that. You will put some reasons. You will leave. If it is a service, can you skip?
No, sir.
You cannot skip for a service, right? For a product, you can skip giving a reason. For a service, we cannot skip. Am I correct?
Yes, sir.
Service purchased means gone. That's it. Because I cannot say I did not receive it. Because I cannot prove it that I did not receive it. Product, I can prove it. And that's where you need to understand order related billing, delivery related billing. Somebody might ask you tomorrow, what is this? How do you create a sales invoice? If you delivered a service, if it is a service item, how do you create the billing? Normally only I will create, is it normal billing or you need to specify order based, delivery based?
You need to specify.
This
Specify order.
specification is required. If you are not able to specify these points, other person can easily come to know that yes, this candidate may not be having proper knowledge. And make sure basic points, let us not give any chance to anyone. Once you are on the topic, you will anyways get to know in detail about everything, how exactly this works, what are all this. For now, what I want everybody to do is just go through this Excel sheet one more time, try to understand, because in any company, in any business, sales and purchases are key factors.
Yes.
Yes, sir.
In any company, buying and selling is important. That's where you talk about a business. Understand how buying is happening, how selling is happening, what is purchase, what is a sale, what is MM, what is ST, what is FIMM, FIST, FIMMST. Basic points, one liner. More than sufficient. You will easily have a clarity as we move forward. Here, the expectation from you is only to understand at least 10% of it. As we move forward, you will have this percentage increased. But at this moment, only 10%, if you understand what we're talking, more than sufficient. All right. Fine, then the remaining portion we will discuss tomorrow.